They said everyday traders could never get a true taste of institutional power in the crypto world. That shocking declaration has been circling in online forums for years, repeated by frustrated enthusiasts who believe that complex, high-stakes products like futures were reserved for giant firms and elite investors. But hold on. Did you hear what Robinhood just announced? It looks like that barrier might be crumbling right before our eyes. Today, we are diving deep into the mind-boggling realm of micro-cryptocurrency futures and why traders everywhere are buzzing about new opportunities, especially for those who have long dreamed of leveling the playing field with the big players. What is actually going on here? And how does Robinhood's introduction of micro-futures, contracts for XRP, Solana, and Bitcoin fit into the larger picture of crypto's ongoing evolution? Prepare for a roller coaster ride through the complexities and possibilities of futures trading, the significance of fractional contracts, the tantalizing promise of near round-the-clock market accessibility, and the brand new synergy that is rewriting the rulebook for both new and experienced traders alike. In this packed episode, we are going to unravel several key questions. Who stands to benefit the most from these micro contracts, and how exactly do they work? Why might smaller capital commitments be a game changer for risk management? And perhaps most importantly, are we witnessing the birth of a new era in which the average crypto enthusiast can wield the same sophisticated tools once reserved exclusively for professional market makers? Let us jump right in. Suddenly, one late June morning in the year 2025, the Robinhood official account dropped an electrifying statement on its social media platform. The news was clear. Partnered with the world-renowned CME Group, Robinhood had launched micro-sized Friday futures contract for three heavy-hitting digital assets: XRP, Solana, and Bitcoin. On the surface, this might sound like yet another announcement about adding more trading options, but beneath that veneer, an entire new universe was unfolding, one that could redefine how crypto derivatives are traded by everyday people. Now, let us pause for a moment and consider why this is revolutionary. Conventional futures trading, especially on institutional platforms, typically demands a hefty margin requirement. Historically, everyday individuals with only modest speculation budgets found the barrier to entry far too tall. Those big standard contracts were often pegged at substantial notional values. In other words, if you wanted to speculate on price swings or hedge your crypto exposure, you had to come to the table with a lot of capital, and you had to be comfortable with the sometimes huge potential swings in value. Many smaller traders would watch from the sidelines, certain they were missing out on advanced tools that could help them manage risk or amplify gains. But with micro futures, that playing field is shifting dramatically. Imagine you are holding an amount of XRP but anxious about price volatility. In the old days, you might think, futures could help me offset some risk or try a new strategy, but I simply cannot afford those oversized contracts. Now, courtesy of these new micro offerings, you can buy or sell contracts sized at just 2,500 tokens each, with the tick size bet at something as modest as 0.0005 XRP increments. Apologies if that sounds a bit like mind-bending small print. The key point is that this micro approach enables traders to protect or speculate with far less capital on the line. Consider a scenario. Maybe you are a smaller-scale crypto enthusiast who only has a close-knit group of friends who dabble in various altcoins for fun. No one in your circle is playing with sums that approach those multi-million-dollar valuations. Yet, you all might still want to test future strategies, explore hedging, or even just enjoy the thrill of using advanced trading tools. With micro XRP futures sized at 2,500 tokens, the margin requirements shrink to a level that is within the reach of typical retail players. Now, it is not just institutional whales or high-net-worth individuals who can harness the power of derivatives. Of course, rolling out new derivative products would only be half the story if the user interface was clunky and opaque. This is where Robinhood's so-called trading ladder becomes a crucial piece of the puzzle. For those who have never encountered a trading ladder, think of it as a streamlined tool that shows you real-time order book depth, allowing you to place buy and sell orders quickly around the prevailing price. Conventional stock traders might have glimpsed something similar in the form of level 2 data, but the trading ladder often provides an even more fluid snapshot of prices. That means that when you spot an exciting opportunity, perhaps a small dip in the XRP price or a sudden upward movement in Solana, you can hop right in or exit with minimal delay. One of the more intriguing aspects of this is the nearly round-the-clock availability. While some traditional markets operate just a handful of hours a day, crypto futures on Robinhood, aligned with the CME Group's scheduling, can trade from 6 p.m. to 5 p.m. Eastern Time, nearly every day of the week, with only a brief pause in between. That essentially means that if you have a hunch at 2 in the morning, or you are responding to some late-night breaking news, you are not stuck waiting for the opening bell. Put differently, the entire approach is built around the concept of immediate accessibility, echoing crypto's original promise of frictionless markets. And yet, there is more to it than just accessibility. What about legitimacy? Over the years, so many promising crypto experiments have stumbled due to regulatory hurdles or friction with established financial authorities. The mention of CME Group is key here because it is one of the largest, most reputable derivatives marketplaces in the world. By hosting micro-futures tied to assets such as XRP, Solana, and Bitcoin, they are effectively lending their credibility and global reach to these blockchain projects. This is not some random, unregulated marketplace hawking obscure coin margins. It is a recognized exchange with solid oversight. When major financial institutions step in and say, "Yes, we are comfortable letting these contracts trade on our platform," that helps calm the nerves of more risk-averse participants. And it also transforms crypto from a perceived fringe phenomenon into something that is recognized as a legitimate vehicle for mainstream trading and hedging. Now, do not get us wrong. Legitimate does not mean risk-free. As many seasoned traders know, futures are by nature leveraged products, meaning that gains and losses can pile up faster than some might anticipate. Even though micro-futures reduce the notional size of each contract, a certain level of caution and discipline is still vital. That is precisely why many proponents see the micro approach as a perfect middle ground. The potential losses in each trade are smaller, but the educational experience and strategic possibilities remain robust, giving novice traders a chance to learn the ropes without the same level of capital stress. Speaking of novices, one of the most enticing aspects of these micro contracts is the potential for incremental learning. Think about how you might approach a new skill, like learning a musical instrument or practicing a new sport. Generally, you would start small, building up your knowledge and confidence over time. If you are entirely new to crypto derivatives, it might be overwhelming to jump into a massive standard futures contract with large margin requirements. But with micro futures, you could dip in a toe, see how the positions shift day to day, and gradually scale up as your comfort grows. People love the idea of risk that is manageable, and the micro format is basically the definition of manageable risk in the futures realm. Now, let us talk about the big question. Why focus so heavily on XRP, among other assets? For starters, many participants in the crypto community view XRP as something of an unsung hero. It has historically been overshadowed by the likes of Bitcoin and Ethereum, yet it boasts a global community that strongly believes in the project's potential, especially as an efficient medium for cross-border payments. By offering micro XRP futures, Robinhood is signaling that there is real demand for advanced trading tools revolving around this digital asset. Another angle might be that the micro format lowers the psychological barrier for those who are new to XRP, letting them explore the asset's volatility without going all in on a huge position. Meanwhile, do not underestimate the significance of Solana and Bitcoin futures joining the party. Bitcoin, as the undisputed pioneer of the crypto realm, remains a magnet for institutional and retail trading volume alike. The volatility can be both exhilarating and terrifying, which is partly why futures that let you fine-tune your position size can be so appealing. Solana, on the other hand, has rapidly carved out a name in decentralized finance circles and has continued to expand its ecosystem. If you have ever wanted to bet on its potential or lock in gains from a prior buy, micro futures might be the puzzle piece you never knew you needed. Let us not forget that behind the scenes, these developments did not just appear overnight. CME Group started laying the groundwork some time ago by rolling out futures contracts for major crypto assets, building the necessary infrastructure, and ensuring that they fit within compliance frameworks. That was a signal flare in the night sky for other platforms like Robinhood, which recognized that the micro approach could be a special formula that resonates with regular folks. So, even though the new contracts may feel sudden, they are the result of longer-term planning and industry-wide momentum. Many experts believe that what we are seeing now might be only the beginning of an even broader wave of micro-derivative offerings across multiple crypto platforms. Naturally, any major shift in how crypto is traded prompts big debates. Skeptics point out that the very existence of leveraged products in the crypto sphere could spur speculative bubbles or intensify market volatility. Advocates respond that derivatives do not have to be the villains. In fact, they can help bring stability by allowing people to hedge positions. The real risk, they say, lies in leaving everyday market participants with zero tools to protect themselves in times of unpredictability. By making futures more transparent and accessible, perhaps we can see a more balanced interplay of market forces. The question on many minds is, will micro contracts truly change the face of crypto, or is this just a short-lived experiment? The short answer is that many signs suggest it could indeed be a game changer. Exchanges and brokerages worldwide are hungry to expand their product suites, especially if they can do so in a compliant and user-friendly way. Traders, both novices and professionals, are always seeking new edges and ways to fine-tune their risk. The timing is right, given that the crypto markets, for all their ups and downs, continue to inch their way into broader adoption. Just as fractional stock shares open the door for people to invest in major companies with just a few dollars, micro futures might unlock advanced trading methods for a diverse range of market participants. Now, if you are finding these revelations mind-blowing, go ahead and let us know by gently tapping that like button. We love seeing your enthusiasm for innovative breakthroughs in the financial realm. Your reaction helps keep these explorations going. Continuing our journey, let us highlight one aspect that might have gone under the radar. By introducing micro-futures not only in Bitcoin, but also featuring coins such as XRP and Solana, Robinhood is placing a bet on a multi-crypto future. No single coin dominates the entire conversation nowadays, and major platforms are recognizing that traders want a variety of options to play with. Sure, Bitcoin is still the big name, but there is a growing appetite for alternative assets, each with unique features and potential growth trajectories. When a major brokerage acknowledges that phenomenon by launching specialized contracts, it is more than a quirky footnote. It is a direct statement that diversification is the new reality of crypto markets. You can almost visualize the ripple effect, pardon the play on words, of these micro futures. A small-scale investor curious about adding some hedged exposure to Solana might log on, find that the margin requirement is within their means, and decide to give it a shot. Perhaps a deeper plunge into the underlying technology or fundamental analysis of Solana's network might follow. That kind of scenario fosters greater engagement and learning, turning casual onlookers into more educated participants. More liquidity, more informed traders, and more hedging strategies can, in theory, help the entire market ecosystem mature. That is the dream anyway. On the flip side, do not be surprised if we start seeing new friction points too. Increased accessibility can attract unscrupulous actors hoping to exploit novices with questionable advice or shady trading signals. So, there is a call to everyone in this space, platforms, educators, experienced investors, to encourage prudent strategies. Micro or not, futures remain a double-edged sword. Potential large gains exist, but so do pitfalls. The emphasis on risk management and continuous learning will only get stronger as more individuals step onto this particular playing field. Let us pivot now to the user experience side. Robinhood's entire brand identity hinges on simplicity and approachability, arguably more so than many of its competitors. From the earliest days, the platform's mobile-friendly interface lured in a generation of younger traders, some of whom had never touched a brokerage platform before. Bringing micro futures for crypto onto that same user-friendly platform suggests an enormous step in bridging the gap between high-level finance and casual participation. However, that process is not always bump-free. Handling real-time changes in futures pricing can feel like a brand new world for people accustomed to slow-moving markets. That is precisely why the near-instant speed of the trading ladder is so enthralling. Picture it. You open the ladder, and in swift real-time, you see bids and asks for micro XRP futures shifting second by second. Red and green bars illuminate your screen. You decide that the price is shifting in your favor, so you place a limit order with just a few taps. Within moments, you have locked in your position, with a margin that is a fraction of what it would have been in the traditional futures environment. At last, you, the ordinary trader, are operating with a level of speed and transparency that used to live in the domain of giant asset managers. That, in a nutshell, is why so many crypto believers are celebrating. They remember how in the earlier days of crypto, say around the year 2017, Bitcoin soared in value and captured headlines, but many also lost money due to the wild volatility and lack of robust products for risk management. It felt like a frontier without guardrails, exciting yet dangerous. Now, in the year 2025, the environment looks markedly different. We have regulated exchanges, we have micro futures, and we have audiences who understand more about blockchain technology. The storyline is evolving from raw speculation to more sophisticated market structures that balance speculation with the ability to hedge and manage positions. Still, the big question lingers. Is this the golden age of retail-driven derivatives, or might we see another wave of hype and then a quick fade into obscurity? Well, consider how fractional shares revolutionize stock investing. Writing out numbers in words can underscore the sense of personal engagement. Instead of dropping thousands of dollars at once, new traders might commit a carefully chosen smaller sum to micro futures. Meanwhile, advanced watchers will keep a close eye on traction. If the volumes for these micro products remain strong over the coming weeks and months, you can bet that other platforms will scramble to launch similar or even more innovative offerings. Amid all the excitement, it is worth reflecting on whether this might escalate the mainstream acceptance of XRP, Solana, and Bitcoin themselves. Advanced financial products often signal a layer of legitimacy that can draw more institutional interest. And while some people in finance still look at crypto with skepticism, the endorsement from established institutions like CME Group, coupled with the user-friendly approach from Robinhood, could melt away some of that residual distrust. Eventually, we might see new participants who come for the micro futures and then end up exploring the broader landscape of digital assets, from non-fungible tokens to decentralized finance applications. Of course, market watchers are quick to point out that if crypto enters another cyclical bear phase, high volatility could overshadow many of these new offerings, leaving only the truly dedicated participants. Even so, having the tools does not become meaningless just because the market sentiment changes. If anything, the capacity to short the market or protect open positions becomes even more critical when turbulent times strike. If you are nodding along and getting that feeling of anticipation, make sure you consider subscribing so you never miss another deep dive into the biggest breakthroughs rocking the crypto world. We aim to keep you well informed, ready to adapt, and confident. Another angle we need to touch upon is the global aspect. Although Robinhood is well known in certain regions, crypto is global, and people from various continents look at these expansions with curiosity. If similar platforms in Europe, Asia, or Latin America follow suit, we could see these micro futures trading day and night, weaving together a tapestry of price discovery that spans multiple time zones. The dream scenario would be that markets become more liquid and more efficient. Yet, integration of global regulations is no small challenge. Some jurisdictions remain wary of derivatives, especially crypto derivatives, precisely because they can amplify risk-taking behavior. Nonetheless, the momentum suggests that if these micro-contracts prove successful, the wave of adoption and regulatory acceptance might gain fresh energy. As the panorama broadens, many wonder how the ability to tap smaller contract sizes might shift the psychology of trading itself. If the intimidation factor melts away, we could see more individuals experimenting with not just buy and hold strategies, but also spreads, straddles, or more advanced techniques, all of which are typical in traditional futures markets but have been less prominent in the crypto space. Over time, this might foster a new generation of retail traders who are more sophisticated and better equipped to handle the inherent swings that digital assets often experience. Looking at the bigger picture, it is clear that Robinhood is positioning itself to be more than a simple on-ramp for casual crypto trades. Acquisitions such as Bitstamp or WonderFi, just to name hypothetical or rumored moves, hint at an overarching ambition to create a one-stop shop for digital finance. From offering micro futures to exploring new payment rails, Robinhood's footprint in crypto seems poised for further expansion. This synergy between user-friendly design and institutional-grade products could very well shape how mainstream users approach digital assets in the next several years. Let us pivot back to the XRP angle for a moment. For a long time, XRP has worn the reputation of either being a strong contender for revolutionizing cross-border payments or a project weighed down by controversies in certain regions. By integrating it into micro-futures, the message is that XRP is here to stay as a viable asset for everyday trading and speculation. We may also see a surge in educational content that teaches newcomers about exactly what XRP is, how it differs from other assets, and why one might choose to speculate on it via futures rather than simply buying tokens outright. That educational dimension could cultivate a more informed base of traders in the long run. Nonetheless, we should stress that trading is always about balancing risk and reward. Whether it is micro futures or macro positions, caution and strategy are essential. Even if you are dealing with smaller notional values, a losing streak can still add up. That is why so many advisors suggest starting with a thorough plan, perhaps even practicing with paper or demo accounts, if available, before committing real funds. The advantage of micro contracts is that once you decide to go in, the stakes are friendlier for smaller budgets. We have covered a lot here, from the building blocks of micro XRP futures and the significance of the CME Group partnership, to the advanced speed of Robinhood's trading ladder, and the broader cultural shift toward crypto derivatives. Each piece of this puzzle reflects a more profound transformation, the bridging of traditional finance with the fast-evolving crypto universe. And if you are listening to these words, learning about micro contracts for the first time, you might be feeling that pulse of excitement. It is not every day that a new product sweeps into the market with the potential to democratize access to sophisticated trading. Ultimately, as we stand at this crossroads of technology, innovation, and financial empowerment, only time will tell how micro-futures flourish. Will they become a standard fixture, eventually overshadowing older, larger contracts for general usage? Will they spark new controversies over fostering excessive speculation among novice traders? Or will they settle into a balanced role, offering measured risk and robust educational opportunities for people determined to become better investors? Whatever the outcome, one thing is certain. Robinhood has thrown down a gauntlet by bringing micro XRP, Solana, and Bitcoin futures onto their platform, raising eyebrows across the crypto world. In the grand tapestry of crypto's evolution, each strand, whether it is smaller contract sizes, advanced user interfaces, or broad regulatory acceptance, strengthens the overall fabric. We are witnessing a transition from a niche corner of hobbyists to a global marketplace that can rival any traditional sector in both complexity and opportunity. For those who have been championing the cause of wider adoption, micro futures might well be the missing ingredient that entices a fresh wave of participants, bridging the gap between curiosity and active engagement. What happens next? The story is still being written, but for anyone who has ever felt left out of the high-stakes crypto game, these developments offer a renewed sense of possibility. The best advice remains the oldest. Do your own research, never invest more than you are willing to lose, and stay open to learning from every success and every failure. With micro futures now on the table, the script for the next chapter of crypto is waiting for you and for all of us to shape it.